Um, all right, guys. So I'm gonna go right to my share screen because I want to do a quick overview of the beautiful investment that some of us have made. And I want you guys to really think about how this is gonna work out. Let me turn this down. So I bought a horse. I bought a digital horse, right? Um, as you guys know, I play poker. I'm a bit of a gambler, but um, you know, poker is skill. It's not like throwing dice, and it's not like playing blackjack. You don't just hope and wait. You kind of do your own research on the player. You do your own research on the texture of the board, and then you make a calculated and educated decision to maximize your money. So
one of the biggest differences between cryptocurrency and the traditional financial system is
Breezy,
that
you started the video. Sorry about that. So what I'm going to do is I'm going to show you how you guys are not late buying your horse. I paid about $600 for my horse. And I will tell you that the horses are actually cheaper right now than doing the blind box. So when I did the blind box, I had to pay 200 fist, and fist was at like 190. So let's just call that, 200 times $2, right? So I paid maybe about five something for my horse. Right now, I'm looking at the market, and there are horses going for way less than that. So with that said, here we go. I'm going to show you something right now, guys. Let me share my screen. Let's go to my horse. You guys can see my screen, right?
Yes, we can.
All right, perfect. So I'm going into the Jockey Club. Again, guys, those of you just joining us, this is play to earn. This is a new era. This is what we're doing. We are playing this game so we can earn money to do so. So I shut off the music on the horse, so it's a little bit annoying, that music. So let me see. So I go to my stable, and my horse needs food. I can see he's at normal. So I'm looking here, and he's at normal state. I want him active so he could win some races for me. So I'm gonna feed him. I already bought the food. The food is over here at home. You hit the home key, and there's the food. So the food cost me about $6, right? So I've already purchased that. Not $6. I apologize. 6 jock, and 6 jock is like 6.5 cents. So let's just call it 6 cents. That's beautiful. So you guys understand how much money you're putting in, so you know how much money you're getting out. So already I paid let's call it $5.90 for the horse, and then I'm paying a little bit of this food. So here I go. I'm gonna go to the stable. I'm gonna feed this guy first. So that's it. Boom. His state is active now. Now he's like ready to race. So I'm gonna bring him here to race. I'm going to the Desert Land 6 race. That's gonna pay me the most. That's the stats on my horse. I got a 4-star horse. Right here it says remaining 3. So every day you get 3 free races where you don't have to pay an entry fee. So here I am. I'm gonna start. You don't have to tap your phone. You don't have to do anything. I have the black horse right there. So I'm just gonna do one race so you guys can see. I paid nothing to race this horse. Remember, this is like a free race for me, so it's total profit as long as I place. right? So I'm looking good so far. Looks like I'm coming in second. Let's see what happens. But what I do want to say while the course is racing is that you can still purchase horses.
Carlos, you sound muffled.
Okay, I'm sorry. Give me 1 second. I'll wait for the race to be over. Okay, guys, can you hear me clearly?
Yes.
Okay, great. So there's an example of me racing my horse one time today. You know what my aim is? And I got 81 jock for that. So probably about 85 cents. So that may seem like peanuts, but when I do that 50 times, let's say 70 times, I'm going to make 50 bucks. So today I get to make 50 bucks just pressing that over and over again. Once that's done, I'm trying to get my $600 back. So now the rest of the year when I'm playing this game, I'm free rolling. So if you equate how many days it's going to take me to get my money back, you're talking about 1 week. Like I can get my money back in a week. So 2, 4, 6, a week and a half, right? So that's awesome. That's like, hold on. And I didn't even know that unless I was part of this community, I would have just been racing them 3 times a day, which it was laughable when I told Max. He said, Los, you have a 4-star horse. Not a lot of us have 4-star horses. How many times are you racing your horse? I said 3. And he laughed. And I'm like, well, what's funny about that? He said, dude, you can maximize your investment in like 2 weeks if you just race them 50 times a day. And I'm like, I didn't realize that, I have a really high winning percentage. And he's absolutely right. So I've tested it out for a couple of days and I've been making money just accumulating jock. And what I do is I take the jock token and then I change it into fist and then I change that into USDT. So if I want to compound it, I could put it into a liquidity pool. If I want to make more money, I can put it into a liquidity pool to get more free FON, right? And we're looking and hoping that FON one day in the near future gets to a higher price, right? Because right now it might be at $2 or $3 a coin. At one point it was at $25 a coin, and I can't lie, I cashed out some FON myself. I whether it was great to do or not to do, for my investment threshold, I needed to do that because I wanted to buy more OSK and more fist. So I bought more OSK, more fist, and I cashed them out. Like I cashed out like a couple of thousand FON. So but this is a 7-year process, right? So I'm mining for the next 7 years. So with that said, guys, if you guys have any questions, Bridget, you gonna have a technical call today or no?
No, it's only Tuesdays and Thursdays, and
Okay,
people
guys.
haven't really been showing up, so we just been sitting there chit-chatting.
All right, good. So Tuesdays and Thursdays, guys, if you guys have any help, if you guys need any help, if you have any interest in purchasing a horse, in racing, this is GameFi. This is so new to the world that people don't realize that it's out here. Like over the holidays, I was talking to a couple of families that I was out in the beach with, and a couple of them have like an autistic kid or two, and they're heavy into games. And I'm like, guys, you have no idea how you could put your kid to play this game, and since he's hyper focused and has hyper attention onto one thing at a time, this would actually be something super amazing. And you're in the cusp of this technology. So don't be afraid to explore, or don't be, if your kid's going to be playing a video game, he might as well be getting paid for it, right? So it behooves you to stay on top of this technology. It behooves you to stay on top of this community, and it's in your best interest to stay connected, because right now, I think one of the videos is going to say it, but I'm going to spoiler alert. Disney just picked Polygon for, it's NFTs, so they're going to do NFTs. They might be doing GameFi. Who knows? It's Disney. Like, it's like Disney does nothing wrong. Anything Disney touches just blows up. Disney Plus, Disney World, Disney anything, it's the mouse. The mouse comes into town, everybody makes money. So Polygon is who they picked. That's fresh off the press. Just happened like 2 days ago. So the whole industry is buzzing. The whole crypto industry is buzzing. When people see Bitcoin going down, and people, I've had people make little slight comments to me because they know I'm in crypto, and they're like, "Oh, what are you doing now that Bitcoin's down?" And I'm like, "You have no clue. You have no clue, because when you see this technology, you can't unsee it. Once you see this and you know where we're going, everybody else looks foolish to you, because they're not jumping on this trend. And it's more than a trend. It's the future. So it's all right. 5 to 6% of the world is in crypto. That's okay. They'll come along. But before they come along, we're going to get educated and we're going to make money. So that's what we're doing right now. All right, guys. So we're going to jump into the first video. If you have any questions, comments, or concerns, let's leave it to the end of this session. Breezy, hit it. Thanks, Breezy.
I think crypto has a very bright future. I'll be bold enough to say in this very volatile market for crypto that within a decade, it'll be the 12th sector of the S&P. And the reason is there's just too much productivity, too much transparency, really strong vehicles for solving financial services problems that exist today, like transferring capital, as I talked about earlier. It's just too good and too efficient. And so it'll remain. The key is we need to get some policy I think it'll happen first with stable coins. And, you asked the question about the stock market. It's no different than the crypto market. The stock market is still a little expensive if you believe we're having a recession, probably fairly valued if you think we're having a soft landing. The trouble is nobody knows. So you're going to see this fibrillation going back and forth until we resolve that question and we know where the Fed stands in further rate hikes. But there are some great companies that have lost 20, 30, 40% of their value. And I have to admit, I'm nibbling in equities as well, just as I am in crypto. And so I can't call the bottom, but I don't use leverage. That's the secret sauce. Everybody's calling me up, want to lend me money. And I just say, no, Nanette, not interested.
Hello and welcome to Money Talks. In today's video, Canadian businessman and entrepreneur, Shark Tank star, popularly known as Mr. Wonderful, Kevin O'Leary, updates about the crypto crisis and companies filing for bankruptcy, his take on Bitcoin and market bottoming, and where we are headed next in the crypto space. Kevin also speaks about his thoughts on NFTs and stablecoins and why regulation is very important for cryptocurrency industry to thrive in these volatile times. Make sure to stick around till the end of this video where Kevin O'Leary explains why more pain is incoming and a big crash can occur very soon. So without wasting any more time, let's dive right into the video.
It's impossible to know, where the bottom is. But I would say this, I don't believe we've seen the bottom yet. And I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event, as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. and it was a fund that was over levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. Hard to say who it is because it's going to be because of leverage and some kind of relationship in a counterparty holding that they have not disclosed. And I'm just speculating right now, but that would be very healthy for the market to have that happen. Voyager's too small, it doesn't matter. The rest of these guys were kind of irrelevant in terms of total market cap. Bitcoin and the crypto market itself has almost been cut in half in total market cap. And so you would think we're on our way to the bottom, but I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. I have no idea who's next. Could be tomorrow morning, could be a month from now, but it's coming to a theater near you. And it will definitely be a very good thing for this industry. It'll be a great thing because it'll take out all of the bad, broken business models, the heavy leverage, the speculation that was too risky.
The price of Bitcoin got a small relief bounce this week as investors hope that the worst of the crypto liquidity crisis is over. Right now, Bitcoin has risen 13.63% for the 7-day trading week beginning Sunday and was on pace for its best week since October. The price rose as high as $22,478 at one point, climbing back from a low of about $17,000 in June. A lot of these insolvencies and forced unwinding from a volume perspective are behind us, as Three Arrows filing for bankruptcy was kind of the final pin in that. Three Arrows, a crypto-focused hedge fund, filed for bankruptcy last week after a sharp decline in digital currency prices exposed a liquidity crisis at the firm. The market contagion could spread into smaller crypto exchanges or funds, Hartman added.
And push everybody, and this kind of circles back to the conversation you were having with Ben and at WonderFi. The reason I'm an investor in WonderFi is I need a place to store my crypto assets that fit into my compliance and accounting departments. And so, you know, when WonderFi was able to offer me a centralized wallet at BitBuy, I was able to say to my auditors, look, you can audit this thing daily, weekly, quarterly, monthly, and I can mark to market each position for you at 4 o'clock, even though it's irrelevant in crypto land. It trades 24/7. But the old infrastructure of compliance that exists for all financial markets has not yet provided systems yet for anybody that wants to be compliant like I have to be. I don't have an option. I have to go through audit. I'm an investor in many other financial services companies that are issuers under regulations in many countries. We have to have our audit statements signed.
Don't fight the Fed is a common expression investors use to explain one of the most influential forces on global financial markets. After multiple years of easy money policies and near zero interest rates, the U.S. Federal Reserve approved an interest rate hike of 0.25%, the first rate hike in more than 3 years. Since then, the Fed has implemented 2 additional rate hikes of 0.5% and 0.75%, bringing the current benchmark interest rate to a range of 1.5% to 1.75%. During the same period of time, risk assets around the world have been falling in price, with Bitcoin declining from $48,000 at the end of March to its current price, which is trading near support at $20,000. The historic rise in cryptocurrency and legacy markets that was witnessed in 2021 was largely driven by the easy money policies of the Fed, and it's highly likely that a return to such policies would once again see funds flow into the crypto ecosystem.
It's taken me a long time to convince my existing compliance and accounting infrastructure that supports my operating company's investments across a wide range of financial services to get on board with my positions in crypto. Because remember, I own WonderFi because I want to own infrastructure equity. Same for FTX, same for Circle. I'm a shareholder of those companies and Immutable Holdings in the NFT space. That's my basket of equities that are all compliant operations. They're all compliant. They all work under very strict compliance. That's the test that starts the equity investment. But the more interesting challenge that I solved recently with WonderFi again, with BitBuy, was to actually open an account, transfer all of my projects, whether it was a Polygon or Helium or whatever. I mean, all this stuff to me, these are not coins. It's just software. That's all it is. and moved it into, and slowly I'm doing this, I'm not finished yet, into BitBuy, where I can get a statement each month that my auditor gets before I do, and my compliance department marks to market every day at 4 o'clock. And I don't, I find it so humorous that the whole compliance world still marks to market crypto at 4:01 p.m. as if that means anything, because it's trading 24/7. But they mark to market it because they have this giant infrastructure that reports back up: is there over leveraged positions? Is the position more than 5%? Depending on the mandate that it's held in. But this is what WonderFi is doing. It's working under the regulator, under an order, completely compliant. Actually has a public auditor looking at it now, signing my statements. That's a big deal. That did not happen for years. And that's why I'd rather invest there, because that's going to become more and more and more important as regulation comes. The large institutions that don't own any crypto need the WonderFis of the world, totally compliant, whether it's decentralized or centralized, and auditors that can actually use the infrastructure they're building to make sure they can mark to market according to the traditional rules of compliance.
Another event that has been rumored for years that could spark a crypto revival in the passage of a spot of Bitcoin for United States markets. Ever since 2017, when the first BTC ETF proposed by the Winklevoss twins was denied by the U.S. Securities and Exchange Commission, there has been one rejection after another for any physically backed Bitcoin ETF proposal put forward. Reasons for the rejection typically revolve around the charge that cryptocurrency markets are easily manipulated and the proper safeguards are not in place to protect investors. If a spot ETF were to be approved, it would render this long-running objection moot and bring a new level of legitimacy to Bitcoin and the crypto asset class as a whole. This has the potential to usher in a new wave of institutional adoption that could bring about the end of crypto winter as new funds flow into the market.
I'm still a huge fan of NFTs for authentication, not for trading. I have never, ever traded one until the regulator tells me if it's a commodity or a security, because I don't want to get caught in that debate. But I have used them. Last week, there was an art exhibit in New York, and I bought a piece. And I asked the dealer and the artist, I will not take delivery without an authentication NFT. And wow. They said, well, wait a second, we don't have one. I said, then you don't have a sale. I want that so I can send it to my insurance company. That's the way things are moving. I'm not trading that NFT. It's attached physically, if you want to think of it that way, to the piece of art I bought. It will trade when the physical art trades. But now I'm able to actually send the NFT to my insurance company and say, this is what I bought, this is when I bought it, here are the attributes of it, here's its physical location, it's on transportation now down to Florida to my home, and all of that is covered in this NFT. So that's the future of NFTs for me. I don't know about an ape or any of that stuff, because to me, where's the intrinsic value there? Somebody tried to sell me an ape for $362,000. It's now worth $60,000. That's not good.
Having an unofficial lender of last resorts like Sam Bankman-Fried to bail out some of the embattled crypto lenders is also providing relief to investors, Draculhoon added. This week, FTX CEO said he and his company still have a few billion on hand to shore up struggling firms that could further destabilize the digital asset industry.
Well, I have to disclose I'm a shareholder. Ben, you should be aware, is a shareholder in WonderFi as well. He came in around the same time I did. I am a paid spokesperson for FTX, so I have a lot of respect for the management there. I did a lot of due diligence before I accepted that position because I wanted to have a compliant home. But Sam is one of the smarter guys in this space for this reason. Long before crypto, he was a trader. He understands the power of leverage, both to the dark side and the upside of performance. So I'm going to guess, and it's a personal opinion, the last guy to blow up is going to be Sam Bankman-Fried, because he doesn't get himself caught in over-levered positions. Now, they're very, very good in terms of managing their own business. He's got a huge team there. Ryan, the CEO, they also manage the Americas differently. They do the rest of the world. They're compliance. His parents are compliance lawyers at Stanford. I mean, he doesn't have a better heritage in terms of managing this process. So I think, He's probably going to be one of the ones that picks up the pieces and has been doing that in recent purchases that are made public in various platforms that are just getting crushed. It's a long-term strategic move. I think it's smart.
So what are your thoughts about the Bitcoin's best week since October as crypto collapse stabilizes? Tell us down in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.
Guys, hold on for 1 second. Breezy, hold that real quick for the next video. Hold that. So what I want to talk about with that video is obviously the fact that Mr. Wonderful is in the space. You know, it's not just him, it's him, it's Mark Cuban, it's Spike Lee. He's gonna start doing his next movie in an NFT. It's Eminem and Snoop, you know, buying Bored Apes. Now they're in the NFT game. I mean, Snoop is heavy in the NFT game, but Eminem just got in it. It's Tory Lanez dropping his latest album on an NFT and selling out in 5 minutes, like literally making $1 million in 5 minutes by just unveiling his NFT. It's Katy Perry gonna do her next album on an NFT, because why, you know, like when this guy was talking about leverage, you know, some of us know what that means. Leverage is basically like borrowing money against something, right? So let's just say like right now I want to get leverage to get a bunch of BTC because BTC is low, Bitcoin's down, and I want to borrow money. And then, you know, yeah, I can make money holding, but I'm going to have to lend that money. I mean, I'm going to have to pay that money back, right? So anytime you borrow money, you're going to have to pay it back. There's a model for them to make their money by lending the money, right? So Katy Perry doesn't have to leverage her album. She doesn't have to say, hey, studios, I have a great idea for this album. This is what we're going to do. We're going to do Candy Cane album, whatever she wants to do. And they love the concept. And they're like, yeah, we got studio money to throw you. Let's give you some video. Let's give you some a budget for your video, a budget for your staff. Let's make this big. Let's make it grand. Let's sell your first single, right? She doesn't have to do that anymore. Artists don't have to do that anymore. Artists, movies don't have to do that. Music artists don't have to do that. We've moved to a different phase, and the more people understand and know, and the more education we get, the more we realize that these digital assets are going to be a part of our lives. Like, we're going to be selling a home pretty soon without having to have a middleman. You know, the coding that the smart contracts have are going to eliminate some jobs and save us a ton of money. Yeah, you know, like remittance. I always talk about remittance, and I talk about Western Union and MoneyGram. They're going to be obsolete. Like, all I have to do is set my son up with a Tron account, get him a Tron wallet, and I send him Tron, and then he just changes it to USDT, and it will cost me 7 cents. Why would I pay Western Union $15? So these institutions and these people that have been doing business like this for years it's shit or get off the pot time. It's literally shit or get off the pot time. You're going to incorporate this technology or you're a dinosaur. Goodbye. This is it. So they're scratching and clawing at regulation. They're hollering, oh, look what happened to Luna. Look what happened to Celsius. So anytime something bad happens in crypto, oh, they're at the front line saying, you see, this is why you need customer service, and you need Visa, and you need American Express. You can't trust, you know, DeFi, and you can't trust technology. I mean, this unregulated technology. So we're in a very peculiar place right now where if you know, you know. And I always say it, if once you see it, you can't unsee it. So you know, they still have to get things fixed. They're still going through experimenting phases, just like our developers are too. You know, our developers aren't perfect. They're not, it's not a machine. It's not hit, flick the machine on and everything's gonna work out the way it's a well-oiled machine. No, there's some experimenting. There's some like right now, people ask about our NFTs all the time. What about our NFTs? What's happening with our NFTs? And I always say this. Think of the project that these guys have. They're not just concentrating on OSK. They're not just concentrating on Fawn. They're not just concentrating on Fist. They're not just concentrating on this new game they have with the Jockey Club. They're not just concentrating on our NFTs. This is all of these projects across the board. The ones that we hold, there's other communities in FSTSwap that hold Litecoin, Tomato. They hold all types of other coins. So these guys are hard at work trying to bring people to our ecosystem saying, hey, you're going to save money on FSTSwap. We are fast, we are efficient, and we are brand new. You have an alternative to a slow Ethereum network, to a slow Bitcoin network. You know, you have choices, you know. So and that's what everybody else is doing. Everybody has, you know, don't be fooled. Everybody, you know, we just happen to be in this community, right? There's about 20,000 different coins. Why us, right? Sometimes you have to ask yourself, why us? Or your friends or your family, when you ask them to join you in this adventure, you know, in this investment, they should say, why you? Like, you know, why not stay with Ethereum? Why not say, well, all these other places don't have a community like we have. All these other places aren't doing a Thursday call. They're not doing a Monday call. They're not doing a Wednesday call. All these other places don't have a guy like Paul that is trying new things and bringing it to the community and say, hey guys, I'm really busy, but here it is. Here's the Jockey Club. Try this out. It seems safe. This is your investment. This is your risk tolerance. Do what you can to do your own research. And that's what we're doing. We're in a very, very fortunate space. That's what I feel like. You know, I feel that if I need to call Breezy, I need to call Paul, I need to call, not Paul, Paul's always busy. But if I need to call Peter, David, you know, I've had people help me out, you know. If I know that Peter and Breezy are doing this for free and they only have Tuesday and Thursday, I'm going to respect that. I'm going to say, hey, I got to make it my business to make that 2 o'clock call. If I'm serious about this investment, I'm going to make it my business. I'm going to prioritize the things that I need to prioritize. If I got to go, I've done it. I've been at my job and gone to the bathroom and said, this is the 10 minutes that I'm giving this call. And hopefully I can get in the top 3 people so Breezy can help me out. And I've ran into the bathroom at work and moved a couple of coins or whatever I needed to do because I didn't know how to do a certain step or two, you know, get into a liquidity pool or whatever it was. So we're fortunate to have a community that takes time to do this. You know, I don't get paid to do this right now. I should be getting ready to go to work. I should be, you know, helping out around the house and doing certain things around the house before I go to work. But I'm choosing you guys right now. I'm choosing to educate you guys. I'm choosing to share with you guys. And no one's paying me to do that. You know, it comes from my heart. It comes from my enthusiasm to share and what I've just heard, what I've just learned. And I just can't wait to tell, you know, my friends and family. You guys are essentially my friends and family. And I appreciate you guys taking your time to listen to the things that I bring forward to you guys. So with that said, let's go to the next video and see what we got.
One of the biggest differences between cryptocurrency and the traditional financial system is that cryptocurrency is transparent. All wallets, balances, and transactions are publicly viewable by anyone. This transparency has made it possible to do elaborate on-chain analysis that can reveal some very valuable information, and Chainalysis recently released a report with no shortage of such info. Today, I'm going to give you a bit of background about Chainalysis's report, summarize what it says in simple terms, and tell you what it could all mean for the crypto market. Before we explore the blockchain, there's something I need to explain. If you're here for financial advice, I'm afraid that's not something you'll obtain. Education and entertainment are the only things this video contains. Please contact a financial advisor if your portfolio is looking lame. Now, if this is the first time you see this bloke, my name is Guy, and some call me the Crypto Pope. I create crypto content whose quality is so high you can almost see the green smoke. Tokens, news, and reviews are just a few of the topics I have for you to toke. If you're already stoked, subscribe to the channel and ping that notification bell for more crypto dope. Okay, that's enough of the intro jokes. Let's look at this report and what it means for us crypto folk. If you've never heard of Chainalysis before, here's what you need to know. Chainalysis is the biggest blockchain analytics company in cryptocurrency, and its job is to track cryptocurrency transactions, mostly for the purposes of regulatory compliance. Chainalysis claims it can track almost every cryptocurrency out there. The company is based in the United States, and it's been around since 2014. It has over 500 clients, including most cryptocurrency exchanges, and has also worked very closely with governments around the world, most notably the US government.
Can you turn it up,
This
Breezy?
might lead you to believe that Chainalysis is anti-crypto, but this doesn't seem to be the case at all. Bestowing BTC on its corporate balance sheet, Chainalysis co-founder and chief strategy officer Jonathan Levin has testified to US politicians in defense of cryptocurrency on many occasions. Chainalysis being the biggest blockchain analytics company also means that it has become the de facto source of truth when governments have questions about cryptocurrency. And let's just say it seems to be more lenient in its transaction tracking compared with other blockchain analytics companies. On that note, you can find out exactly how they track transactions by watching our video about the biggest blockchain analytics companies, which will be down in the description. Now, in addition to helping public and private institutions keep track of crypto transactions, Chainalysis regularly provides in-depth research reports, which can provide some extremely valuable information about specific cryptocurrencies and the crypto market as a whole. Today's research report is titled, quote, "The Chainalysis State of Web3 Report," which gives an overview of the current state of cryptocurrency. The report was released at the end of June, and I'll leave a link to the full text in the description if you're interested. Note that you'll have to enter some personal information to access the report. Blockchain analytics companies, eh? All right, enough jokes for one day, I say. Sit back and relax while I unpack this crazy crypto report. As always, I'll give you my thoughts as we go along. The Chainalysis report begins with a brief introduction where the authors argue that all companies will eventually become crypto companies and users will access their services using browser extension wallets like MetaMask. What's odd is that the authors note that around 8% of Americans hold cryptocurrency, which is far off from the 20% statistic given during a recent hearing about the future of crypto regulation in the United States, which we covered in another video. That'll be in the description, of course. The authors then talk about how crypto will make it possible to cut the middleman out of the equation, notably middlemen who make important decisions, such as who gets to have a mortgage. The authors explain that algorithms will decide this automatically instead, and I'm not so sure how I feel about that. The authors also explain how crypto will make it possible for users to own and have a say over the services they use with tokens and decentralized autonomous organizations, or DAOs, which they see as expanding to other crypto niches outside of DeFi before going mainstream. When it comes to on-chain trends, the authors note that there continues to be lots of interest in DeFi despite the crypto bear market, that most transaction volume is coming from smart contract cryptocurrencies, and that most of these transactions are related to stablecoins. As you can see, the smart contract-related activities that are attracting the most transaction fees and transfers are decentralized exchanges, borrowing and lending protocols, NFTs, infrastructure-related protocols, and, to a lesser extent, DAOs. Whereas DeFi protocols and DAOs are typically attracting experienced crypto users and investors, NFTs seem to be the gateway into crypto for new and inexperienced users and investors. The authors know this because the wallets interacting with NFTs tend to be much newer. Neat stuff. The authors end the introduction by calling on the crypto community to do 3 things. Get as many new users into cryptocurrency as possible, make decentralized applications and browser extension wallets used to interact with them more user-friendly, and focus on stuff like NFTs that's easy to grasp. Challenge accepted. Now, the first part of the Chainalysis report concerns the largest Layer 1 cryptocurrencies, and the authors begin by explaining that Layer 1 cryptocurrencies are those which are used to pay transaction fees on their respective blockchains, so BTC for Bitcoin, ETH for Ethereum, and so on. Speaking of Ethereum, the authors talk all about the adoption it has seen from both users and developers, and correctly point out that Ethereum's slow transaction speeds and high fees have resulted in the creation of multiple so-called Ethereum killers, including Solana and Algorand. What's annoying is that the authors say Solana uses proof of history as its consensus mechanism, which isn't technically correct. If you watched our video about crypto consensus mechanisms, you'll know that proof of history is a part of Solana's proof of stake consensus mechanism. Take notes, folks. The authors then pivot to comparing Bitcoin, Ethereum, and Algorand, which is a peculiar combination to say the least. That's because Algorand hasn't seen nearly the same amount of adoption as the first 2, and the image here says it all. It's the number of unique active wallet addresses on each blockchain. At first, I thought this peculiar combination was because Algorand might have sponsored the report, but apparently that's not the case. As such, I suspect that it might just be the bias of the author, or possibly a subtle sign that Algorand is a much bigger deal than most crypto holders believe. Take notes indeed. Now, the authors found that large institutions have the biggest presence on Ethereum, that smaller institutions have the biggest presence on Bitcoin, and that professional investors have the biggest presence on Algorand. The authors also found that institutional interest in Bitcoin has remained the same over the last year or so, whereas it has declined slightly for Ethereum and declined significantly for Algorand. Again, this makes me wonder why this trifecta of coins was chosen. Not to go off on too much of a tangent, but the authors note that the institutional interest in Algorand started to decline sometime in September. This happens to be around the time that Algorand's accelerated vesting ended. You can learn more about that using the link in the description. Anyways, the authors then turn to discussing the problems with Ethereum, and this is where they make another minor mistake. The authors note Visa can process 1,500 transactions per second, when Visa can actually process closer to 65,000 transactions per second, as per its own fact sheet. I suspect that 1,500 figure comes from the fact that Visa processes an average of 1,500 transactions per second on any given day, which is obviously nowhere close to the number of transactions per second the Visa network can actually handle. I digress. Now, aside from scalability, the authors take issue with Ethereum's high transaction fees, which are, quote, virtually always at least 20% or more of the transaction cost. The authors note that the only time Ethereum transaction fees compete with legacy payment networks is when the amount of crypto being sent is more than $500, in which case the transaction fee accounts for around 4% of total transaction on average, which is equivalent to most credit cards. The authors also argue that Ethereum's EIP 1559 upgrade hasn't done nearly enough to increase the predictability of transaction fees, something the upgrade was supposed to do. They provide tables for Ethereum transaction fees before and after EIP 1559 as proof, and, well, fair enough. The authors then discuss a few Ethereum competitors, starting with Solana. Here, they correctly note that proof of history is part of Solana's proof of stake consensus. Whew, had me worried there. What's interesting is that it appears the authors reached out to Solana's developers to confirm its transaction speed, and the developers specified, quote, transactions per second generally between 1,500 and 3,500, with a maximum of 65,000 depending on transaction complexity. This suggests that Solana's max smart contract transaction speed is lower than 65,000, which makes sense and something I'll be sure to discuss when we cover Solana again. You can find our most recent update about the project in the description. Anyhow, what's also interesting is that the Solana developers told the authors that the number of daily active users on Solana has increased by 40% over the last 3 months, which either means that Solana is handling the crypto bear market very well, or that Solana simply saw a temporary resurgence in users. The second Ethereum competitor the authors cover is again Algorand, and what's funny is the only thing they really say is, quote, most transaction volume for Algorand is moving through big centralized exchanges, but its staking rewards pool also sees significant activity. The third Ethereum competitor the authors cover is BNB Chain, formerly known as Binance Chain. The authors note that, quote, BNB Chain can't be said to be fully trustless in the technical sense, as it's maintained by a centralized, legally incorporated business entity, which is, of course, Binance. This is something we mentioned in our recent BNB update, and the authors also point to the fact that much of BNB's supply is held by the Binance team as evidence of centralization, something we also mentioned in our recent BNB update. That is, of course, in the description, by the way. The fourth Ethereum competitor the authors cover is Avalanche, and after explaining how it works, the authors note that most dApps on Avalanche are related to DeFi, something which ultimately resulted in AVAX getting hit hard by Terra's collapse. More about that in the description too. The authors end this section by claiming that Ethereum is unlikely to be dethroned as the biggest smart contract cryptocurrency anytime soon, and even claim that the current crypto bear market could kill off most, if not all, of the so-called Ethereum killers, despite all the investment they've received. Bold claim. The second part of the report concerns digital identity, which is a term that makes many crypto holders uncomfortable, including myself. The thing is that there's such a thing as a decentralized digital identity that allows users to maintain control of their identity and is therefore much less dystopian. This seems to be the angle the authors take when they talk about how browser extension wallets like MetaMask could become de facto digital identities in the future economy. They also talk about Ethereum name service and the immense value of its human-readable wallet addresses in this context. The authors note that over 1.1 million ENS domains have been registered by over 400,000 unique Ethereum wallets, and as you can see, most of these ENS domains were registered in just the last couple of months. The authors also applaud ENS's integrations with the ICANN registry and IPFS. Now, I honestly expected a bit more from this section, especially since decentralized digital identities will be extremely important for cryptocurrency's evolution. I was also expecting to see something about the soul-bound NFTs proposed by Ethereum creator Vitalik Buterin. More about those in the description. Anyhow, the third part of the report concerns DeFi, and here the authors begin by examining the exponential adoption of decentralized exchanges, or DEXs. As you can see, DEXs surpassed centralized cryptocurrency exchanges, CEXs, by transaction fees in early 2021 and have maintained their lead since then. Not surprisingly, the authors found that transaction volumes on DEXs and CEXs are closely related to the current state of the crypto market, with pumps resulting in more transaction volume and vice versa. The authors note that CEXs have held up much better during the recent slump, which is also not surprising. The authors also note that 85% of all DEX transaction volume is coming from just 5 DEXs, which is, once again, not all that surprising, though it is annoying that the authors don't specify which DEXs these are. It's a similar story for sexes, with 50% of all sex trading volume coming from the top sexes. Now, get your minds out of the gutter, guys. This is crypto, not Amsterdam. Now, the authors take this discrepancy as evidence that the DEX game seems to be more of a winner-takes-all arrangement, and they suspect that this might have to do with the lack of liquidity in the crypto market. Obviously, nobody wants to trade on a DEX with lots of slippage, so users stick to the same ones. The authors then measured the profitability of providing said liquidity on these DEXs for users to trade with, and what's frustrating is that they don't specify how much the average LP has been earning. Just the total amount for all LPs, which has, quote, fluctuated between $50 and $100 million. The authors end this section by speculating on whether DEXs will continue to lead in terms of transaction fees, and they argue that it all boils down to three things: whether DEX fees can stay low, whether they can survive regulations, and whether they can convince investors that they're super safe. Now, as many of you will know, surviving regulations is code for becoming fully decentralized, and you can find out exactly what that means using the link in the description. Moving on. The fourth part of the report concerns DeFi again, but this time the authors focus on lending and staking. A footnote on this page specifies that this section doesn't have to do with centralized lending and staking with platforms like Celsius. That part comes later. What's odd is that the authors include staking on proof-of-stake cryptocurrencies in this section, even though it's not exactly related to DeFi. In any case, the authors begin by showcasing the largest cryptocurrencies by staked value. These are Solana, Cardano, and Ethereum's Beacon Chain. Once upon a time, Terra was second, but let's not bring up too many painful memories. That part comes later too. Yay. Now, the authors then provide this amazing infographic, which shows you the staking rewards associated with some of the largest proof-of-stake cryptocurrencies. As you can see, the larger the cryptocurrency, the lower the staking reward. The authors believe this is because of the lower risk these larger cryptos carry. The authors also take a second to talk about Lido Finance's staked ETH or ST-ETH and how its misuse in borrowing and lending protocols, quote, turns what by design is a relatively low-risk asset into a high-risk one. More about Lido Finance in the description. After quickly explaining how borrowing and lending protocols work, the authors reveal that the amount of crypto being sent to borrowing and lending protocols actually increased significantly at the end of May, though something tells me this has to do with all the loans borrowers were paying back. The authors point out that Aave has remained the most popular borrowing and lending protocol, which really makes me wonder why they didn't label the DEXs they mentioned earlier, because naming names doesn't seem to be an issue here. In any case, the authors also found that around 84% of crypto borrowed from protocols like Aave is sent to other DeFi protocols, with around 38% going to decentralized exchanges. The authors correctly point out that all this leverage can become a problem when the crypto market goes wonky, as we've seen. The fifth part of the Chainalysis report concerns decentralized autonomous organizations, or DAOs, and this is the part of the report that made the crypto headlines. That's because fewer than 1% of token holders hold 90% of the voting power across the 10 DAOs the authors analyzed, which are presumably the biggest ones. Obviously, that is not exactly decentralized, nor is it a good thing for the crypto projects these DAOs are for. Now, the authors don't note which DAOs they're talking about here either, but a few come to mind, most notably the DAO for Decentraland, where a whale rejected a series of governance proposals that were passing between the time we shot our last update on the project and the time we uploaded it. Pretty wild. What's worse is that the authors found that the governance requirements of the 10 DAOs they analyzed are out of reach for the average crypto holder, with a proposal requiring between 0.1% and 1% of a token's circulating supply to be tabled, and requiring 1 to 4% of a token's circulating supply to pass. As a result, there are only a handful of DAO participants that have the power to table and pass proposals, which is no good for decentralization. As the authors point out, quote, there are several trade-offs at play here. If too many holders can create a proposal, the average proposal's quality may fall and the DAO may be riddled with governance spam. But if too few can, the community may come to feel that decentralized governance rings false. The authors even go as far as to explain what recently happened with Solend, one of Solana's largest DeFi protocols. The TLDR there is that a single Solend whale voted to take away the funds of a Solana whale who was close to being liquidated on the platform, a proposal which was reversed the very next day. Now, while there are many different types of DAOs for DeFi, NFT collections, grant protocols, play-to-earn games, venture funds, charities, and virtual worlds, the DAOs for DeFi protocols hold more than 80% of all the money held by all DAOs, with nearly $8 billion in crypto. What's fascinating is that the most held cryptocurrency by DAOs is the USDC stablecoin, with nearly 60% of DAOs holding the de facto digital dollar. However, only a small percentage of them hold most of their treasuries in USDC, with the average DAO treasury having up to 10% exposure to USDC. The authors speculate that the limited use of these massive treasuries boils down to regulatory uncertainty and the legal status of DAOs, which makes sense. Another thing that makes sense is the fact that most of the funds going into DAO treasuries are coming from advanced crypto users, with more than 80% of DAO funds coming from DeFi protocols. Now, the authors end this section by expressing their excitement about the future of DAOs and highlighting the fact that we all have a front row seat to see their evolution over the coming years. I happen to believe DAOs could eventually replace governments, and you can learn about that using the link down below. Anywho, the sixth part of the report concerns NFTs, and the authors begin by pointing out that NFT-related transactions have fluctuated significantly since 2021 and actually appear to be in a long-term uptrend, despite the recent drop-off in NFT interest. What's insane is that $37 billion of crypto has been sent to NFT marketplaces since the start of the year. To put things into perspective, $40 billion of crypto was sent to NFT marketplaces across all of 2021. Sounds to me like the crypto bear market hasn't hit NFTs yet. Another indicator in this regard is the number of active NFT buyers and sellers, which likewise remains insanely high despite the crypto bear market. What's more is that this number continues to grow, but it may be because long-time NFT holders are coming back to capitalize on some of their gains, if any. What's interesting is that most NFT holders and traders come from Central and Southern Asia, with Africa coming in a close second. Now, I suspect this has to do with play-to-earn games like Axie Infinity, which are extremely popular in countries like the Philippines. You can learn more about Axie Infinity using the link in the description. Now, given the locations of most NFT holders and traders, it should come as no surprise that most are classified as retail, according to Chainalysis's criteria. When looking at this NFT data in terms of transaction value, it's clear to see that most of the actual trading volume is coming from NFT collectors, with a surprisingly small amount coming from institutional investors. The authors note that institutional activity in NFTs hit its peak of 74% in October last year because of the Bored Ape Yacht Club. Note that the authors define institutional as more than 100K in value, which is why lots of Bored Ape Yacht Club activity corresponds to large institutional readings. Those apes are pricey. The authors end this section with a screenshot of Google search trends for NFTs in the United States, which shows a big drop-off in interest, and a question of whether the NFT niche will be able to attract the same amount of interest in the future. Now, the fact that the authors used search trends from the United States is a bit suspect because when you look at global search trends for NFTs, it's clear to see that interest in this crypto niche has completely fallen off a cliff. Looks like the authors needed a bit of copium. The seventh part of the report concerns two NFT-related niches, which are, of course, metaverses and blockchain gaming. The authors begin by dropping a bombshell, and that's that the cost of land in metaverse worlds has increased by almost 9x since September 2019 and continues to rise. The authors attribute this to the fact that, like real-life real estate, virtual land can be monetized. They note access to private events and exclusive communities as the primary reason why the virtual land bubble continues to grow. There's also the prospect of leasing land in the future. Now, if you're wondering where the most expensive virtual land can be found, the authors have got you covered with this useful infographic. As you can see, Bored Ape Yacht Club's other deeds, Decentraland and The Sandbox take the lead with 4-figure starting prices. What's interesting is that most virtual landowners don't seem to hold on to their parcels for too long, save for a few exceptions. As you might have guessed, this is likely because virtual landowners are big fans of flipping their parcels for a profit. I suppose there's not much else you can do with it at the moment. The authors then discuss the possibility of all these metaverse worlds becoming interoperable, including with those created by centralized tech giants such as Meta and Microsoft. The authors cite the recently formed Metaverse Standards Forum as proof that this is on the cards, but something tells me this setting of standards by centralized tech giants is meant to cut crypto out of the equation rather than integrate with it. The authors also state that the success of these metaverse worlds ultimately depends on the quality of the hardware used to interact with them. Virtual reality and augmented reality headsets will be critical in driving adoption, and the authors note that the growth on that front has been close to exponential. As for blockchain gaming, the authors highlight the fact that blockchain gaming activity has increased by more than 20x over the last year. And if you watched our recent video about Cointelegraph's NFT and Metaverse report, you'll know that most of this figure is coming from Axie Infinity. The authors then go through a thought experiment of what it would be like for a centralized gaming giant to get involved in blockchain gaming, and they guesstimate just how much money these gaming companies and their gamers could make by incorporating things like NFTs. Short answer, quite a bit. Unfortunately, the authors don't elaborate too much more about blockchain gaming and instead end the section by not so subtly revealing that they are working with gaming giants to incorporate cryptocurrency for their blockchain aspirations. If you're curious about the top blockchain games out there today, you can check out our video about that using the link in the description. And now, back to the report. The 8th part of the report concerns every crypto holder's favorite topic, and that's safety and compliance. Now, as I mentioned earlier, Chainalysis seems to be pretty tame when it comes to these kind of topics. Case in point, one of the first sentences says, quote, "Operators in the industry associated with that technology need to work to stamp out abuse by bad actors, sometimes with the help of the public sector." Sometimes is the key word here, and I take it as a suggestion that crypto can regulate itself. The authors then present one of my favorite statistics in cryptocurrency, and that's that just 0.15% of cryptocurrency transactions are related to illicit activity. The authors acknowledge this amazing statistic, but stress that there's still some shady stuff going on in DeFi, specifically hackers trying to get their stolen crypto out and money launderers trying to make their ill-gotten crypto clean. As many of you will know, most of the hacks in crypto have been perpetrated against DeFi protocols, though it should be noted that it's not clear whether the authors include flash loans in these statistics. In my opinion, using flash loans is not a form of hacking, it's a form of admittedly extreme arbitrage. In any case, what's crazy is that most of the hackers appear to be from North Korea, with the Hermit Kingdom acquiring over $840 million in crypto since the start of the year, their most lucrative year yet. Now, this is pretty concerning because North Korea is using this money to fund its weapons research. As for money laundering, DeFi is the go-to for those folks too, with nearly 70% of crypto laundering being done with DeFi protocols this year so far. What's funny is that NFTs aren't noted as a money laundering option here. If you watched our video about NFTs and money laundering, you'll know that it seems to be a lot more prevalent than Chainalysis is apparently able to detect. Coincidentally, the next subsection mentions NFTs, but it focuses on wash trading, which by Chainalysis' own account hasn't been all that profitable for its perpetrators. The ninth part of the report concerns another exciting topic, and that's mitigating financial risk. In all seriousness, this section is extremely interesting because it's enormously relevant to all the stuff that's been happening lately. 3 Arrows Capital going under, Celsius apparently being insolvent, Voyager Digital declaring bankruptcy, all that fun stuff. The authors begin by pointing out that crypto has become highly correlated with tech stocks, and that's something I spent a lot of time talking about in our recent video about how low the crypto market could go. That is, of course, in the description if you missed it. Now, the authors take this correlation as a sign that cryptocurrency is starting to mature as an asset class, since the correlation suggests that BTC and even many altcoins are finding their way into institutional portfolios. I reckon we touched on that earlier. The authors then explain how cryptocurrency's transparency makes it superior to the traditional financial system during market downturns, because you can see exactly who's getting wrecked on-chain and what effects this could have on other investors and projects in the ecosystem. The authors argue that the reason why the crypto bear market has been so brutal is because of DeFi, though I would push back against that a bit, as BTC's volatility is roughly where it should be relative to tech stocks. The evidence for the author's argument is that the number of DeFi protocols, along with the amount of money they received, ballooned during the bull market, prepping the stage for a big pop. On the CeFi side, the authors believe that crypto platforms like Celsius were pushed to offer even higher returns on crypto to continue adding new users. And in the middle of a crypto market meltdown, this meant looking for riskier and riskier ways to earn the yield they needed behind the scenes. The authors actually managed to figure out exactly what these crypto platforms were doing to earn this extreme yield on-chain, and yield-generating strategies related to lending came in at close to 40% in the second quarter of this year. That is more or less consistent with what we found in our analysis of Celsius's sudden decline, and you can find that video in the description. The authors end this section by appropriately noting, quote, "Some projects that were hastily built or services that didn't properly manage risk will fail, and that's a natural process for any new technology or industry." Instead of calling for the regulation of DeFi, the authors call on regulators to look closer at centralized crypto platforms and understand how they're using DeFi to assess whether they're operating in a way that's truly in the best interests of their users. Amen to that. The 10th part of the Chainalysis report concerns Terra's collapse, which I'm sure you're all sick of hearing about. But trust me when I say you want to hear this. On the 7th of May, Terra withdrew UST from Curve Finance's 3 pool in preparation for migration to the 4 pool. This reduced the liquidity in the 3 pool, which made it easier for someone to move UST's price below its $1 peg. Note that the timing of this 3 pool withdrawal was not publicly known. 3 minutes later, 2 traders dumped UST into the 3 pool, the first swapping 85 million UST for USDC, and the second swapping 100 million UST for USDC. This pushed UST below its peg, and UST holders started to panic as the crypto market was already in a general decline. Although the authors don't mention this, Celsius was actually the first mover after UST fell below its peg. It pulled $500 million of UST out of Anchor Protocol out of caution in order to protect its users' funds. But this caused even more panic in the markets, leading to a sell-off of both Luna and UST. What the authors do mention is the extensive recovery efforts that were taking place at the same time. 3 unknown whales deposited 480 million of Tether's USDT into the 3 pool to try and stabilize UST's price in the 3 days that followed. On the 4th day, Terra's Luna Foundation Guard emptied the clip of its billions in BTC reserves, but it was just barely enough to prop up UST's peg until the next day, when it completely lost its peg and began its death spiral down to 0, along with Luna. It's certainly nice to see yet another confirmation of what we discovered on our end about Terra's collapse, and you can find out what we found using the link in the description. Now, after explaining the difference between algorithmic, crypto-collateralized, and fiat-backed stablecoins, the authors admit that there isn't all that much on-chain evidence to suggest that Terra's collapse caused the crypto market crash that was going on at the time. The authors believe it's more than likely that BTC's correlation with tech stocks was the primary factor, since tech stocks were simultaneously on the decline while Luna became a lunk. Even so, the authors don't doubt that Terra's collapse did damage to the crypto market. Recall that Avalanche was hit hard. The authors even have some on-chain evidence to this effect, as they found that, quote, hundreds of billions more stablecoins than usual were sold for cash, which is odd given that the market caps of all stablecoins combined isn't that large. Probably a typo. In any case, quote, redemptions peaked across all stablecoins, algorithmic and asset-backed. This suggests that the collapse scared many investors away from stablecoins altogether, not just those of a certain class. The authors acknowledge that USDT briefly fell below its peg, but managed to regain it after it processed $13 billion of USDT redemptions. Crazy how these massive figures are just normal in crypto. The authors conclude the report with, quote, UST's collapse may pose a threat to consumer confidence in the short term and serve as a legislative catalyst in the long term, but it's unlikely to stop the growth of responsible innovation in the industry. Fortunately, thanks to blockchain's transparency, we can learn from these incidents, educate others, and continue to build trust in cryptocurrency. So, this brings me to the big question, and that's what this report means for cryptocurrency. In short, it's a sign that the crypto market isn't in nearly as bad of a shape as crypto prices would have you believe. On-chain activities suggest that the fundamentals for cryptocurrency continue to improve, even in newer crypto niches like NFTs and DeFi. Not only that, but this report was published in the middle of the crypto bear market. Obviously, this report isn't exactly meant to be read by regular folks like you and me. It's something that's meant for more private and public institutions and experienced investors. The fact that Chainalysis wrote this report suggests there's still lots of demand for this kind of crypto content from these entities, and that's pretty damn bullish if you ask me. Either that, or it's a sign that the regulators are coming in and Chainalysis is trying to put out some positive info to prevent a crackdown, but let's not jinx it. On that note, I want to take a second to give a shout out to Chainalysis for putting together such an incredible report. Critical comments aside, this information is extremely valuable to everyone who's involved in crypto, and I cannot wait to cover the next one. And that is all for today's video about Chainalysis's massive crypto report. If you found it as interesting as I did, smash that like button to let them know. If you plan on coming back for more massive crypto report summaries, subscribe to the channel and ping that notification bell down below. If you're looking...
Thank you so much. I'm glad you found that valuable. Glad you found that valuable, guys. Give me a second. Let me just turn this AC off. It's very loud. And all right, guys. So a little bit about that video. You know what I love? I love that he talked about DeFi and liquidity. And I feel like, you know, quiet as kept, we have one of the best liquidities, you know, in the DeFi world, right? We're in the top 10. Man, we're in the top 3. So that's been fun to see that. It's been like a breath of fresh air knowing that we're in a long-term project, you know, knowing that in these bear markets, projects come and go. Some people can't withstand the bear market. And that's what we're doing right now. We're withstanding the bear market. Because when the bull market comes, like they say, there's a saying that says, when there's a flood, all boats float. And I think, again, this is speculation, and this is not financial advice, but I think as soon as BTC actually, as soon as the stock market gets correct, it'll trickle to BTC, Bitcoin, and then it'll trickle to the rest of the altcoins. And basically that analogy of when there's a flood, all boats float. I think we'll all be floating as soon as this bull market comes back. So any questions? Oh, Maxine. Let me see. Was Maxine first? Yeah, Maxine, go ahead.
Oh, hi everyone. I just have a question. It's not really about the video. It's about the jockey. I was on a call on Monday night, and they were talking about the horse. I'm just gonna put it as the horse and tomato. But I didn't see anything about that prior to being on calls about it. It wasn't posted in the FSTSwap, and I thought these were FSTSwap projects. So that
Yeah.
was my only question is, I don't see this in the FSTSwap English group.
Yeah, we spoke a little bit.
You come on the call and you hear it. That's my only.
Well, you're breaking up, Maxine.
Oh, you hearing me now?
Yes.
No, I was saying I didn't see it in the FSTSwap English group, the jockey or the horse thing and tomato that was they're talking about on the calls. I don't see posted in the FSTSwap group, and I was saying I thought these were FSTSwap projects, and I didn't hear about it in there before we came on the calls. I was just wondering,
Yes, you were right about tomato. You're right about you know what I mean, and correct me if I'm wrong, Doris, Fabrizio, anybody else, but right now, like on my picture, right, we have Fist, we have the PGNFT, we have OSK right there, right? Like I think their focus is Fist, OSK, Fawn. And with people still trying to wrap their heads around liquidity pools and voting nodes and all of that, I'm not sure if they wanted to put the Jockey Club there and put the tomato project there, because it would add to confusion, and it would add to when that telegram that we use goes out to the world. It's not a private, like this is private. That thing goes out to everyone. And we're trying to get new users to come on to FSTSwap and get their head around the three main tokens before they start playing around in the ecosystem that FSTSwap has to offer. That's the only answer I think I can give. Hopefully it's the right one. We'll talk to David when he gets on here. Let's see, what's today? Today's Thursday, so Saturday we have a call. But yeah, I think that's why you didn't see that stuff.
Okay, I was just wondering because I know we have those other things that is utmost on everyone's mind because we have been in this for a minute. But I was just wondering if these are projects that's building up FSTSwap, so to speak. I don't know. I was just wondering.
Yeah, this is all part. So consider the like the Jockey Club, right? The horse game. Consider that a different audience that we're trying to speak to, right? So we're trying, I jump up into the auditorium and I start talking about crypto, and maybe there's a bunch of gamers there that they just don't want to talk about anything but gaming. That's what they know. That's what they like. That's what their experience is in. So their attention is only going to be focused when there's gaming. There's going to be another set of group of people that only deal with NFTs. They understand NFTs. They understand the technology of NFTs. And then there's other people that just want to, get a token, follow its price going up and down, and they don't care about anything technical about it. They consider it a stock, right? Sometimes people get on here and they're fixated on the fact that the price is down, and they're like, hey, what's up? So I look at those people as people that are like, they look at it as a stock. They don't look at the underlying technology all the integration of the use case for it, right? So I know that I have jockey tokens. I know that the jock token, I need to feed my horse, and I know I need to enter races with it. That already tells me that's going to make me reverse engineer the information and go, oh, wait a minute. So people have to feed their horses, and people have to pay to enter a race. So how many horses were bought? So now I want to know that information, right? So I think it was something like 7,500. So you got 7,500 people with horses that need to be fed. And that's just now before they're bred. Once you start breeding the horses, let's just say all of that multiplies. Now you got 15,000 people. I mean, you have 15,000 horses out there that need food or they die. 15,000 people that have horses that if you want your money back, you're going to race to get your money back. That's the whole idea of this, is to play to earn. So,
all I was saying is that if these are other opportunity for people to make money and it's a part of FSTSwap, I mean, maybe it should be posted so people will know. Even if you know, not everyone attend meetings. I'm always on the meetings, but not everyone, but they might be interested in something like this while they're waiting to see what's going on with our project. I'm just saying.
No, you're right. But it's going to take us. It's going to take, you know, if that's not, if that's something that we can't post on FSTSwap, right? Then that's something that's going to take each and every one of us. If I have 5 friends, it's up to me to tell my 5 friends. If you have somebody that's interested in doing something while they wait for the rise of these prices, then it's up to you to get on the call and communicate that to your people.
Well, I'm on the call and I'm hearing about the jockey thing, and you guys are showing your horses, and then I'm hearing about this tomato. Yeah. I have no clue. You know, I'm just
and that's cool.
That's screen. You guys showing your screen, your horse racing, your horse, but I still don't know anything about the project.
Hey, Carla, can I jump in?
Yeah, go ahead, Bridget.
Hey, so Maxine, I do apologize because I did think it was in there, because there is a fun Telegram group, and that's where the jockey stuff is in. So yes, it was discussed on the calls. It was my fault. I thought that link was in the Telegram, but it's going to be added now. So for anyone that is interested in racing, they'll be able to join the fun Telegram group, and that's where all the jockey information is going to be at. So again, like Carlos was saying, FSTSwap is concentrating on the projects we have at hand, and for newcomers to come in, and then any other projects that are going to happen, they do like making new Telegram groups for it, because not everyone's interested in racing horses. Not everyone's interested in doing certain things that are going to be available with these projects. And that's going to overwhelm the FSTSwap Telegram group that we have. So we are going to add the link for the fun Telegram group, and that's where the jockey horses will be. But again, we do speak about this on every call. So anyone who's interested obviously can reach out, or even say in the English group, hey, what's going on with Jockey Club? How do I get involved? But if, we don't know that people are interested, and yes, I understand that you don't necessarily see it in Telegram group, but you are on the calls and know about when we talk about the Jockey Club. So that's all I wanted to add, was that we are adding the link for the fun Telegram group in the FSTSwap English group, so that if you want to join or anyone interested in joining, and we'll pin it as well. So for anyone that wants to refer back to it, okay?
Okay, but I understand what you're saying. But as I said, you was just saying I could reach out into our Telegram saying you want more information about the jockey group. Now I put that in there. Nobody else knew about this jockey thing. I mean,
well, they should if they come on the calls. We have. We have 11 people
on the calls. No, what I'm saying, you said to post a question like that in the FSTSwap English. But if I'm on the call, I know what it is, and I'm asking questions about. But again, people in the FSTSwap group don't know about this, so they're probably going to think I'm posting something in the wrong group.
Well, no, the admin responds back to it and says, here's where you
that's what I'm like.
Yeah. Because you've got multiple admins that review what people write. And so we would respond back with, hey, if you're interested in that, you can go to this. or whatever the case may be. But we'll get that
Okay.
taken
All
care
right.
of.
I
And we got
I
you, Max.
got you.
Okay,
I got
sweetheart?
you.
All right.
Thank you.
And Doris, you have your hand up, my love. Oh, wait, I thought you were co-host.
Yep, I've been trying to unmute.
I'm sorry, I thought you were co-host. What happened?
No, I guess earlier I couldn't hear anything. I had to come back, so maybe
Oh,
that's why. Yeah.
okay, sweetheart.
I just want to add to that, Maxine. It was, I mean, you were on the call, and yes, we showed the horse. I even showed my horse, and we all actually playing the horse. We have the horse. We still have a lot to learn about the Jockey Club because the club itself hasn't opened yet. There are other things that are not open yet. So there is still a lot of upgrades that they are doing. Sometimes, you know, I can't get into my club because they have upgraded things and I have to delete and add it again and all that. But for sure, we have the last 3 calls, we have been talking about Jockey Club. The last call itself, I was playing the horse itself and showing. But this is what, if you don't understand, you have to reach out. You know, all of us. Please reach out to any of us. Say, hey, what is this Jockey Club about? Okay, I don't understand. Help me understand this. This is our job, right? To reach out to anyone. I always reach out to Breezy, Carlos, any of the people like Max, right? Because I don't understand, right? So in order for us to understand something, we have to reach out. If you don't understand something, you're on the calls, you listen to it, you have no idea, then it's your responsibility to reach out to somebody who might have the answer, right? We reach out all the time to have clarity, to understand how we're doing. Initially, like Carlos, I only do like 3, 4, 5 times. I didn't understand what it means, right? We didn't know that, oh, because right now your horse doesn't age. So to take advantage of all the races, you know, to get all the jobs, play as many games as the game allows, depending on your horse. Like Carlos have a 4-star horse. I only have a 2-star horse. So it's different, right? So 4-star horse is higher. So if he sells it, because it's a better breed, it will bring in more money, right? So, but we're all learning. I'm still learning, even though I'm playing every day, I'm still learning. Okay, like what do we do? Initially, we were touching the screen. We will like touch our thumb. It's and then we realized that, oh, you don't need to, right? So we are all in this together, even like tomato, right? That's why a lot of right now, FSTSwap is in a place where we are getting new developers joining us. That's where, you know, that's their job, to bring in more people to join our FSTSwap. So they are bringing their community to us as well, right? So this is where the project is going. It's not about FIS, OSK, Fawn, and yes, these are the 3 major ones, but there are other that are coming that we are given the chance to participate, especially in the beginning stage, right? So these are the things that we have to pay attention. Not every one of them, it's a good one. So that's why, like, I really appreciate Max for taking the time to read the white paper and understand it and say, hey, this sounds good, right? So then if you're early enough to jump in, just like for us, when we have no idea what, like for myself, I don't even understand what a blind box is really, right? But just say, okay, 200 FIS to buy a horse. And that's what we did. And so there are a lot to this, but I think all of us have to take responsible for our own investment. Don't just leave it out to any one of the leaders, admins, or whatever. If you are not sure about something, you know us, all of you know us. Reach out to any one of us and ask, what's this that they're talking about? You know, can you enlighten me? Can you show me? Can you share with me? We will do that. We will share whatever we know. From day one, we have operated like that. So please reach out if you have any questions. Okay? That's all I have to say. Thank you.
You're awesome, Doris.
Okay.
All right, ladies and gentlemen, we have been on for an hour and a half now. Do we have any other questions? If not, we do have a call that was moved from last night to Saturday. Please pay attention to the announcements for when that will be on Saturday. And then we'll be back Monday. All right, thank you for joining us. I will make it able for you to unmute. I know it's a small group, but you can unmute yourself and say your farewells. Thank you for joining us today. Have a wonderful rest of the week, and we'll see you on Saturday.
Thank you, everyone.
Thank you, everybody.
All right, Eileen and Lana.
Bye, Breezy.
Bye.
Thank you. It's a
Thank you,
great call.
Maxine. And Maxine, just come to the FSTSwap English group, and it should be pinned there. But if not, I'll send it to you directly, the new link, okay? Or not the new link, but the link, just in case your FSTSwap one isn't working. All right, everybody, have a good one. Talk to you tomorrow, Saturday. Bye.